Hello and welcome to Business Standards Morning Show. I am Ruchika Chakravanshi and let us take a look at the stories for today.
Only Intel combines flexible performance and security across the world's clouds to take on the huge challenge of exploring space.
From edge to cloud, where there's wonderful, there's Intel.
Before laying out a broad framework for economic recovery in its budget, the Centre is likely to convene a meeting of the GST Council next month. On the agenda will be rationalization of tax rates to boost GST revenues, as it is the Finance Ministry's understanding that continuous restructuring of tax rates have hurt collections. Another issue on the table will be the inverted duty structure for certain goods. Let us find out all that we can expect from the GST Council's meeting next month in this report.
Another round of rationalization of tax rates is on the cards. The centre is looking to convene a meeting of the Goods and Services Tax or GST Council in early January. Besides rate rationalization, a correction of the inverted duty structure is also expected. Inverted duty structure is when inputs for a product are taxed at a higher rate than the outgoing product itself. At the 45th GST Council meeting in Lucknow on September 17, the council had set up a group of ministers headed by Karnataka Chief Minister Basavaraj Bommai to look at the possibility for rate rationalization and correction of the inverted duty structure. The GOM's report is expected to be finalized before the January meeting of the GST Council. We may also see more talks on merging one or two tax slabs. These recommendations were recently made with the National Institute of Public Finance and Policy, a finance ministry-backed think tank. The study suggests that the government can rationalize the GST rate structure without losing revenues by rejigging the four major rates of 5%, 12%, 18% and 28% with a three-rate framework of 8%, 15% and 30%. The study estimates that if the GST rate structure prevailing at its onset in July 2017 was restored last year, additional GST revenues of nearly 1.25 lakh crore rupees could have accrued in 2020-21. In fact, at the last GST Council meeting in September, Finance Minister Nirmala Sitharaman had pointed out that multiple rate changes since the onset of GST in 2017 had lowered the revenue neutral rate from the original 15.5% to 11.6%. Let us go to some experts to understand what they expect from the next GST Council meeting.
There are two groups of ministers that are likely to submit reports. The first group of ministers is going to suggest a roadmap for the short and medium term changes in the GST rate structure. The first group of ministers would, in fact, look at items which are exempted under the GST regime or merging of the tax slab rates. And the second group of ministers is going to look at other issues with respect to technology and improving the compliances, which will include monitoring through improved e-waste systems, e-invoices, the FASTag data system. Now, the first group of ministers has a very crucial task for a variety of reasons. Number one is what should be the revenue neutral rate. So if you go back into the design of the GST system, the revenue neutral rate at that point in time was pegged around 15.5%. But that was as the rate that applied in 2017. Now, over the years, as you know, the GST rates have come down. Obviously, that's not affordable, and hence the rate has to go up. Now, how do you really push this 11% rate to what was the revenue neutral rate at the time of the introduction of the GST law, which was 15 to 15.5%? You either take this 5 and 12% rate beyond the 5 and 12% rate, or you look at from a 5 slab structure to a 3 slab structure.
At this stage, we have to just bear in mind that the rationalization of rates in GST is in some ways an ongoing exercise, because we can't possibly have a situation over the next few years where we say that all rates for all products and services are perfect and no further changes are required. We are still in the evolutionary stage of GST, because GST as of now is just going to be around 5 years old, and possibly therefore there would be certain products and certain services where we may need rate tweaks, either basis the present situation or basis some other changes which have happened in that sector or in that particular business. So it is going to be a little ongoing. The expectation is that it should not become too frequent. We also hope that the GST Council will look at the issue in respect of the compensation cess and take steps to ensure that the compensation cess, if it is increased beyond 1st of July 2022, as seems inevitable now, the period of the increase is kept as minimum as possible.
We can therefore expect an increase in the GST rates or a merger of slabs so that the average GST rate would inch closer to the revenue neutral rate. With the GST regime completing 4.5 years, it may be time to consider an overhaul of the rate structure for the long term, but the industry must be given sufficient time to incorporate any such changes. We cannot risk destabilizing the GST system right when the economy is bouncing back.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the GST, let us see how Swedish furniture and home accessories maker Ikea is planning to expand its footprint in India. Still basking under the 3 times jump in its online sales during the lockdown, the company recently opened its first small format city store in Mumbai to get a step closer to its customers. In an interview with Business Standards, Charlene D'Souza, Peter Betzel, Chief Executive Officer and Chief Sustainability Officer of Ikea India, shares the company's expansion and investment plans in India. Let us join the chat.
I have with me Mr. Peter Betzel, the Chief Executive Officer of IKEA India. Thank you so much for joining us on the morning show, Mr. Betzel.
Hello, everybody.
Now that you've opened your first city store in India, will you be more aggressive with your expansion plans in terms of just opening city stores in order to be closer to customers?
So first of all, we are very happy that we are opening our first city store in India, in Mumbai, which is part of our accessibility strategy. We would like to be a really, truly omnichannel retailer. You know that IKEA has been starting more than 70 years ago with our stores, with the bigger stores, and we have 2 bigger stores already in India, which is Hyderabad, running on a great success. We have now in Mumbai, running on a great success. We are online. We have been adding over the last years in many countries, but also in India. We are online in Bangalore already today, online in Hyderabad, online in Mumbai, also online in Pune, and in 3 more cities in Gujarat. And now we would like to be even closer to the many people in India, and that we are starting that format now, first time in India, in Mumbai, with smaller formats where we can be even closer to the many people while they are living in the cities. Maybe another smaller format city store coming up in the coming 12 months. We will open our next big store in Bangalore, which will be early summer. We already have been working on our small XS store format, city store format, also in Bangalore, needed, and we are exploring online opportunities and smaller format opportunities, continuing also in tier 2 and tier 3 cities for the future. I wouldn't say it's aggressive. I think it's a bit more changed in the approach.
What is the product assortment that is available at the city store compared to your big box stores that you have in Hyderabad and Mumbai?
You have for immediate takeaway, you have 2,000 articles, very exciting. And we had our family day this week already. We had a lot of loyal family customers here, and they have been really exciting about what they can take away. And you have available all, because we have when it comes to furniture, when it comes to kitchen, when it comes to bedroom, when it comes to mattresses, when it comes to wardrobes, when it comes to living room, when it comes to sofas, when it comes to storage, when it comes to children range. Order here everything online. So what you can get immediately is a service for you. We can plan your Pax wardrobe, we can plan your kitchen, we can plan your full home, your full house with our fantastic co-workers here. We have a nice planning studios here. You can plan it. You can order it on a sales deck, so you will get the delivery for your home.
Now that Indians are sitting more at home, what has been the demand that you have seen come from your stores and even from online? And if you could give us the split of the extent of revenue that online contributes to your overall revenue in India.
What has been strong during COVID has for sure the work, all what is connected to work from home, all what is connected to children, and all what is connected also to the living room, to decoration, seasonality. So a lot of benefit, which we are very happy that home furnishing becomes a higher interest in India and also a higher share of wallet. So that is number one. But then also the demand for online has been increasing. Not only online ordering online, but also for more online services. So we have been introducing services like you can have a virtual planning for your kitchen. You can have a virtual planning and home furnishing consultants for your full home. You can have a support in how can I do that better. So this has been increasing a lot. And the other part is also the online order has been increasing a lot. So overall for Inca, that means globally the online sales has been increasing 70%. It's now on a share of 30%. And we saw the same in India. So it has been increasing. The share is from 10 to 12% has now increasing to 30%, but both has been benefiting. When it comes together, the high interest for home furnishing, the higher demand for home furnishing in itself, plus more opportunities.
You had announced an investment of 10,500 crores, out of which you've also said 6,000 crore will go to Maharashtra. Can you elaborate a little more on where this amount that you have promised towards investment in India will go?
This is only the investment for retail, what we have been announcing. So 10,500, and we have been investing in Hyderabad, now in Mumbai, even with the next city store coming up. Also, when it comes to the fulfillment units, what we have in Pune, this will continue. Then we will open our next big store in Bangalore. So the first big store in Bangalore, early summer. We will have another city store format also in Bangalore coming up. And then also in Delhi, we have been recently announcing with our colleagues from Center, mixed-use project, meeting places like shopping center connected to Ikea. And only the Ikea retail investment is 10,500 crores, plus more investments to come when we talk with our colleagues of Center. So they're investing separately. Additionally, we have GBO, global GBO coming into India. We are planning to have a digital hub in India. So these are all additional investments which need to come. So also the investment journey continues along the opportunities what we see.
Thank you so much for taking the time out to speak with us at Business Standard.
Thank you, Shalene.
क्या हाल? मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Just like the Swedish furniture maker, brokerages too are bullish for 2022. Though they rule out the easy money-making phase, they believe the returns from the market in 2022 will track growth in corporate earnings. Where are global equities headed in the next calendar year? What is the target for Sensex, and which sectors may catch investor fancy? Our next report finds out.
A sharp pullback in index heavyweights, Bajaj Finance, Reliance Industries and HDFC dismantled a firm set up in the markets on Monday. After starting gap up and reclaiming crucial psychological levels of 59,000 and 17,600 in intraday deals, the BSE Sensex dropped over 500 points to end at 58,283 levels. The Nifty 50, on the other hand, shut sharp at 17,368, down 143 points. Individually, shares of Bajaj Finance cracked 3% after global brokerage CLSA gave a sell rating to the consumer financier. Further, it believes the stock is likely to undershoot investors' expectation over the medium term. Overall, it has a target price of 6,000 rupees on the stock, which translates into a 17% downside from current levels. The rub-off effect hit shares of Bajaj Finserv as well, which dropped 2% on the bourses yesterday. This and the nervousness in the global markets ahead of key central banks' meetings this week may keep indices volatile on Tuesday as well. Moreover, reaction to inflation data, initial public offers of MedPlus Health, data patterns and Metro Brands, listing of Anand Rathi Wealth, analyst meet of ITC, and news flow around the severity of Omicron coronavirus variant will keep investors on their toes today. As we come closer towards the new year, holiday season in the overseas market and subsequent thin trading may keep indices range-bound over the next few sessions. Further, volumes may pick up with the onset of 2022, where equities as an asset class will continue to remain investor favorite. According to analysts, peaking US inflation and modest policy easing in China into the first quarter of 2022 should provide some relief. Here's a lowdown of what some of the key global brokerages are expecting from the markets in 2022. According to analysts at Jefferies, Asia's performance in 2022 will be dominated by significant changes in China, and investors should keep a close eye on further cooling of the mainland economy. As regards India, the brokerage believes the country has entered a period of economic supercycle driven by housing cycle turnaround. It estimates over 7% GDP growth and 15% earnings growth for FY23. It says any correction due to inflation, valuation, and the US Fed rate hike should be used to add to cyclicals. The brokerage remains overweight on financials, property, and autos and expects markets to hit a new high in 2022. For analysts at Bank of America, global liquidity is on course for a peak around March 2022. They expect the balance sheet of G4 central banks to expand by another $750 billion by that time and then peak out. Markets too will likely reach a high around the same time and may then see a downward bias as the earnings cycle in China surprises negatively and the US dollar remains strong. Credit Suisse also foresees attractive returns from global equities in 2022, with the earnings remaining the key driver. Domestically, Nifty earnings per share is projected to go 15% annually over FY19 and FY24, with the financials contributing nearly half the growth during the period. The brokerage prefers domestic cyclicals over global cyclicals and is overweight on financials, industries, and cement. Among individual stocks, SBI, HDFC, and Ultratech Cement are the top picks. Morgan Stanley analysts have the most conservative estimates as they expect emerging market equities to struggle in 2022. While they're more constructive on Japan equities and see 12% upside to their TOPIX target of 2,250, they're cautious on India. With a 50% probability, they see the Sensex hitting 70,000 mark in their base case scenario by December 2022. In a bull case, it may rise to 80,000 level or may fall to 50,000 mark in the bear case.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
It is not just the market which is catching people's fancy. A new app is also doing the same. Two registrar and transfer agents of the mutual funds industry recently launched a transaction platform for investors. Named MF Central, it promises to provide a dashboard to all mutual fund investors where they can place service requests like change of email, phone number, and nomination. Its app is also likely to be launched in the next few days. Let us find out how it will make the life of investors easier.
Following the directive of the Securities and Exchange Board of India, the country's two largest registrar and transfer agents, CAMS and K-Fintech, came together to set up MF Central. The first phase of MF Central went live on September 23rd, and the platform will become fully functional by the year end. Investors can sign up using their PAN and mobile number. The first phase covers non-financial transactions, allowing investors to get a consolidated portfolio view in real time, place service requests like change of phone number or bank account, update nominee details, download consolidated account statements, and view unclaimed payouts. Investors can also track all their service requests at one place. The second phase will see the launch of a mobile app this month. The third and the final phase will let investors buy, sell, and switch mutual funds. MF Central will also enable integration with ecosystem partners for several value-added services. According to CAMS Managing Director Anuj Kumar, the platform will simplify mutual fund services and reduce turnaround time for investors. However, industry players have questioned the need for a new interoperable platform when three similar dashboards are already in existence, providing similar services. Investment platform Kuvera's CEO Gaurav Rastogi had in July said it is not clear why SEBI has mandated another such platform. The National Stock Exchange's Mutual Fund Service System, BSE Star MF, and MF Utilities India, which is sponsored by the mutual fund industry, allow investors to make financial and non-financial transactions. But MF Central promotes ease by requiring just the PAN and mobile number to see your investments. It remains to be seen how the new platform takes shape and whether it is as user-friendly as the current options.
Only Intel combines flexible performance and security across the world's clouds to take on the huge challenge of exploring space.
From edge to cloud, where there's wonderful, there's Intel.
That's all we have for you today. We will be back with more news and analysis. Stay tuned, and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.